Hi, my name is Troy Martin with Cook Martin Poulsen, and today we'll be discussing deducting automobile expenses. One of the most common questions we get asked is, how can I deduct my automobile for my business? Or what are my options when it comes to my automobile? We'd like to take a couple of minutes today to discuss what your options are for deducting costs associated with your vehicle. There are two options you have. First has to deal with mileage reimbursement, or you can actually go with the actual cost of your vehicle. Mileage is probably the easiest to track. You report all your business miles on a mileage log, turn that expense into your business, and the business writes you a reimbursement check for 55.5 cents per mile. Don't forget the 0.5 cents. It's important to keep business mileage logs so that you can substantiate your miles to the IRS. The second option is actual cost. With the actual cost, you're able to take depreciation on the vehicle, depending on the type of vehicle. Let's discuss the different types of depreciation for vehicles. First, Section 179 is used for most vehicles which are more than 6,000 pounds gross vehicle weighted. With Section 179, we're able to expense the cost of the vehicle in the first year of owning it. You must have income in your business to take Section 179, and you cannot use Section 179 to create a loss in the business. Section 179 is available for automobiles over 6,000 pounds gross vehicle weighted. However, there are special limits on SUV type vehicles, and the limitation is $25,000 for the first year. Keep in mind there is bonus depreciation for 2012. Where you can take 50% of the vehicle's cost as long as the vehicle is brand new, meaning original use. In addition to claiming 50%, you'll be able to claim an additional 20% of the remaining 50% for a total deduction of 60% in the first year, with the balance being depreciated over the remaining tax life of the vehicle. Keep in mind that luxury auto limits still apply, so to take advantage of bonus depreciation, you may want to purchase a truck or an SUV with a gross vehicle rating over 6,000 pounds. Let's discuss a little bit of luxury automobile limits, because this is a crazy rule that's been around for a long time. Believe it or not, the IRS calls a luxury automobile a vehicle that costs more than $15,200 and weighs less than 6,000 pounds. Basically, anything is going to be considered a luxury automobile to the IRS. So it's not eligible for Section 179, and it's a luxury automobile. You're going to be stuck with lower depreciation deduction. In the first year, it's $2,960, $4,800 in the second year, $2,860 in the third year, and about $1,775 each year after until the depreciation runs out. If you compare the difference between luxury automobiles, which are less than 6,000 pounds, costing more than $15,200, then you're going to be really limited on the amount of depreciation you can take. However, if you buy a truck or an SUV over 6,000 pounds gross vehicle weighted, you will not be subject to the luxury auto limitations, therefore your deductions will be much greater. In addition to taking depreciation under the actual cost option, you'll also take the fuel associated with running the vehicle, insurance on the vehicle, repairs, maintenance, washes, tires, you name it. Anything that's associated with maintaining or running your vehicle. Also, be aware that using actual cost, you're only allowed to use the actual cost and to the related business use of the vehicle. So if you only use the vehicle 60% for business, you would only be able to deduct 60% of the actual expenses. To document your business usage, you must keep a mileage log. Those are the two methods that you have to choose from, the mileage method or the actual cost method. Once you have chosen a method for a particular vehicle, you're stuck using that method until you sell the vehicle. We hope this has been beneficial, and we'd love to discuss more details with you as you may have more specific questions to your situation.